Hello, everyone. Thank you for joining today's session. We will be getting started shortly. We do have a lot of folks signed up for today's session, and we want to give everyone a moment to log on and get connected so that we can dive into today's session. I do want to thank you all for joining us today. I am Jasmine Garrett here with the New Jersey Economic Development Authority. Today's session is an informational overview on the NJEDA Technology Business Tax Certificate Transfer NOL Program. Quick housekeeping note, we do suspect that many questions will be answered in today's presentation. However, if you have any questions at any point during the presentation, please feel free to send your questions to nol@njeda.gov. Today's session is being recorded and will be posted on our NJEDA and YouTube pages. The slides and other resources will also be available in the next few days. Now to get us started, I will shift things over to Clark Smith, Director of Innovation Programs. Clark.
Thanks, Jasmine. Good afternoon, everyone. Thanks for joining us today for our annual NOL program webinar. As Jasmine said, I'm Clark Smith, the Director of Innovation Programs. And after my welcome here, Christopher Shires will be walking everyone through our program presentation. Then I'll be coming back to lead our question and answer period. But please be aware, all participants are muted here. Only us presenters can speak. So if you do have questions, please use the Q&A chat feature at the bottom of the screen. There's a little button that says Q&A, and write in your question so that we can address it after the prepared comments. Before we get started here, I'd like to note the program website is your best reference for all things NOL program. That website address is www.njeda.gov/NOL.com will still work as well. There already is a video out there that is very, very similar to the presentation around requirements and eligibility. But as Jasmine said, we certainly will make these slides available on the website, and today's recording will also be available. I'd also encourage everyone to investigate the other programs on our website, like the Angel Investor Tax Credit Program, as well as our partner organization, the Commission on Science, Innovation, and Technology. If you're interested in NOL, you probably will also want to know more about some of the other programs we have available. If you have any questions or inquiries around NOL or any of these other offerings, please send us an email. Each program has a program-specific email address that's related on each website. Or if you already have a contact here at the EDA, please tell them you're interested in learning more. If they're not able to address your questions, they'll be able to route you to someone who can. With that, thanks again for your attendance, and let's jump into NOL. Christopher, please feel free to begin your presentation.
Okay, well, thank you, Clark, and thank you all for joining today. As mentioned, this is a Technology Business Tax Certificate Transfer Program, which is a really, really long name, which we affectionately refer to as the NOL program. So today, we're going to briefly provide you an overview of the program. The presentation's maybe 12 minutes, and then we'll open it up to Q&A at the end. The overview is going to cover pretty much all aspects of the program, so let's get into it. The Technology Business Tax Certificate Transfer Program allows biotechnology and technology companies to sell the tax offset, to sell their net operating loss and R&D credits as a non-dilutive cash injection to the firm. Those certificates are sold, and therefore the losses are transferred to the buyer. The EDA determines the eligibility of the applicant, and then the actual benefit amount is determined by the Division of Taxation based on tax filings. The program has a company lifetime cap of $20 million in tax credits. That's not necessarily the cash benefit, that's the tax credit. And the program annually is capped at $75 million of available awardable tax credits. The timeline for the program begins in January of the year, where we basically dot all I's and cross all T's, make sure websites are updated, make sure application materials are current, because occasionally there are changes to the program. The program goes live in the beginning of May. It went live May 1 this year. And there's a hard statutory deadline of June 30th. And they don't literally pull the plug on the computer, but they do lock all applications. Even if they're in process, they are locked. So that's important to know, because once it's locked, no new information can be provided. And so applicants are encouraged to put in everything that's requested, because all that can come in afterward is clarifying information. There's a review process, occurs in July and August. Sometimes it extends to September based on the number of applications. The board approves the recommendations in typically September, October. Then it goes over to Division of Taxation, where they determine the award amount. What's called closing is the selling of the certificate. And when the certificate is sold and cash is received by the seller from the buyer, that's considered to be closing. That closing has to be concluded by April 15th. So you see, this is actually a year-long program because there's many steps in the process. Like all good things, there is a fee involved. There is an application fee of $1,000, and there's an approval fee, which is 1% of the benefit, and it's required for awards greater than $100,000, and it's capped at $20,000. The application fee is credited towards that $20,000 cap. There's an allocation set aside of $15 million of the 75 geared towards businesses located in opportunity zones. There is a link on our website that allows you to determine if you are located in an opportunity zone, or if you're certified by the state of New Jersey as a woman business enterprise or a minority business enterprise. I'll describe that a little bit more later. Eligibility is predicated on a company meeting the definitions of biotechnology or technology businesses. Those definitions will be provided to you. The primary business must involve the provision of a scientific process, product, or service. They must own protected proprietary intellectual property. I'll define that for you as well. They must not have a positive operating income for the past 2 years. In other words, they're not yet profitable. They employ no more than 224 employees in the US. They must have at least one time full employee in New Jersey. There is actually a number based on of employees based on the years of operation, which I will define for you. And they must offer health insurance. Employees don't have to receive it, they can opt out, but the health insurance must be offered by the employer. The eligible business must have a headquarters or a base of operations in New Jersey. They must have owned or filed for or have an exclusive license to a patented technology. That patent can be pending, it can be declined but in appeals, but it has to be a patent assigned to the applicant. So if it's a parent company holding the patent, it must be assigned to the subsidiary applicant. Or an exclusive license. An exclusive license means globally, so it's not exclusive to New Jersey. The definitions for biotechnology and technology are fairly broad, but they are specific to technology. So that has to be core to the business operations. I'm going to try to elaborate a little bit further on what is protected intellectual property and what is not. So the patent must be assigned to the applicant. The exclusive license must be for commercializing the technology, and it must be exclusive globally. A copyright registration is really geared towards software. So software can be copyright. It's a little challenging to do, but that's also an eligible technology. This technology must be core to the business. It can't be a patent sitting on a shelf. It must be something that is being commercialized in New Jersey. And the patent must be active and it must be assigned. It can't be expired. Important to note that trade secrets, trademarks, copyrights on text or images, sales agreements, none of these are considered to be intellectual property for the purposes of the program. Having a license to use software is also not intellectual property that's being commercialized in the state of New Jersey. So this is a critical component of the program. This is about commercialization of technology and innovation in the state. Now, CPA financial statements are required. They must evidence the past 2 years have not had positive operating income. These CPA statements have to be prepared by GAAP standards and show no positive operating income. The CPA's cover letter must be required. All footnotes must be required. The income statement, the cash flow statements must be provided. If the company is owned or controlled directly or indirectly, 50% or more, those financial statements must also be provided, must also show no positive operating income for the past 2 years. The last statements here, consolidating financial statements are always acceptable. Consolidated may be acceptable depending on what's been included and how the business is structured. Now, this is the fun part of the program. You can have a maximum of 224 employees in the United States. This includes all affiliates, parents, and subsidiaries. If the business has been in operation for less than 3 years, and this is technically from its founding. So if the company, let's say hypothetically, was created as an LLC in 2010, but was never operational, it's still founded in 2010. So that would mean it's been in operation for more than 5 years. This chart shows you that if you've been in operation less than 3 years, you need 1 full-time employee. 3 to 5 years, you need 5. And if more than 5 years, you need 10 full-time employees working physically in New Jersey. So a full-time employee must be working 35 hours a week, must be subject to wage taxes, which means if you're a Pennsylvania resident, you would not count in the employee minimum required accounts because you're not paying taxes in the state of New Jersey. Again, you must be offered health insurance. You must be physically working 80% of the time. So if, for example, you are a resident of New York or Delaware, or some other state that's a commutable distance, you will still have to evidence that you're physically working in New Jersey. That can be done through time cards, that can be done through Easy Pass tolls, however you're commuting, but you must be working physically in New Jersey. Full-time employees cannot be research assistants, they cannot be interns, they cannot be anybody paid by 1099 because they need to be subject to wage taxes in New Jersey from the employer. There is an online application. It's available on our website. It's fairly self-explanatory. There's also a sample application for the people to review, just to be familiar with what's expected to be provided. And again, this deadline of June 30th is hard by statute. So 11:59 p.m., consider the plug is pulled, the application is locked. So put everything in there so that you're not missing anything when you submit. It's always best to submit early because it gives the review team an opportunity to see if anything is missing and notify you. Now, this is a hypothetical example of how you would calculate the tax benefit. Again, you are selling the offset. So you would take the maximum corporate tax rate, which is 9%, and you would multiply that out, and then you would sell it into the market. Now, there's a statutory floor of 80 cents on the dollar. The typical market rate is around 90 cents. EDA is not part of the transaction. That's specifically between the seller and the buyer. There is a list of buyers on our website, so sellers can easily identify people interested in acquiring this tax benefit. So again, the annual allocation is $75 million available to be awarded. There is $15 million set aside for minority-owned businesses, women-owned businesses, or businesses operating in an opportunity zone. It's a waterfall process. That $15 million is earmarked, and then the rest goes into the general pool. If the program is oversubscribed, $75 million, more than $75 million has been requested and is awardable, it's awarded in a proportionate manner. So everybody will have a proportionate amount of tax credits to sell. There is a clawback provision. If the company ceases to have its base of operations or its headquarters in New Jersey, it's 20% per year. It can be taken back. So the only exception to that is if the company fails, it goes out of business, it's liquidated. There's no clawback for a liquidated company. But if they cease to have operations in New Jersey, there will be a clawback. There's a lot of information available on the website, and I really encourage you to take a look at the frequently asked questions, because a lot of scenarios are dealt with and explained in detail. It's a quite thorough document. It's very useful, very helpful for you to understand eligibility. And again, if you have questions about eligibility, send them to the email address here, and we will come back to you and schedule an MS Teams call if necessary. Thank you very much for your time. We will open it up to Q&A, which I believe Jasmine will help moderate.
Yeah, and I'll jump in as well. Just before we get to the questions, there's a couple of things I wanted to mention, and probably maybe could help if there was a question around it. So first thing I wanted to highlight is the caps, right? So the company cap is now a lifetime amount of $20 million. The program is now $75 million. These increased, I believe, 2 years ago, but specifically around the company one. And if you are assisting other applicants, we've had multiple companies that participated in the past that now came back because they had tapped out on the previous amount of $15 million, but still were unprofitable for that or running at an operating loss, and could come back to the program and sell their new benefit amount. So that's something to think about. When we're talking about PPIP, right, assigned to the applicant is very important and sometimes overlooked, and meaning a classic example is a patent that was done and filed under the inventor, and then the inventor either joins a company or starts a new company. There has to be either in the patent itself or in the employment agreement or a separate agreement that shows that the specific patent that's being used for PPIP is assigned to the company that is the applicant company here. Around copyrights, and that's almost always, from my experience, software. It needs to be copyrighted as digital content. We have had in the past, the classic example here is a video game company that had their characters copyrighted. That is not considered PPIP. It is the actual coding language that has been used. And for an exclusive license, that is 9 times out of 10 companies that have spun out of a university or are using technologies that were developed in the university setting. When we go to application, can't stress this enough. The deadline is by the end of day, June 30th, 12:01, July 1st. It is locked. You highly suggest, if you can, submit early. There has been some questions around base of operations and HQs. So that needs to be a physical location. Same thing. When we're evaluating full-time employees, there are some that are out of state that would be commuting. We will look for evidence that they are making and meeting the definition. And I wanted to note this because there will be new FAQs added very shortly around those two things. Also with the application, it's very important to note when you enter the benefit that you'd like to be able to sell, the requirement is that you have to enter it year by year. You can't commingle the past accrued years. It follows the carry forward tax law. So if you wanted to sell multiple years, you can, but you must indicate each specific year. If you commingle them all into the most recent year, you'll only be able to sell the most recent year. As was noted before, the EA just approves that you are eligible to participate. The benefit amount is related to us by taxation. So if you commingle into just the most recent year, they will say you're only able to sell the most recent year, and those past years will just be available in the future. Along those same lines, we did get a question around companies that are less than 2 years in existence. Can they participate? Yes, they are still subject to the financial statements being prepared by outside CPA. So if you were just recently formed sometime in 2022, you still would have to have a outside prepared financial statement that shows the years of existence, so or the financials from the start of the company. But I would throw the caveat again, the EDA just verifies that you are eligible to participate. The benefit is tied to a corporate tax filing in the state of New Jersey. So it's very important for all companies that they have the most recent year filed by June 30th if they want that benefit amount that was accrued to be available to sell in this year's program. So if it's a brand new company, make sure those corporate business tax returns are in, and also you're not selling the loss amount, it's the tax offset created. So make sure that there's, you know, a real a relative amount there that makes it worth your while. Because a lot of times we see companies are eligible to participate, but then they are surprised when what they're delivered, what their benefit amount is. A similar circumstance happens a lot of times. Companies that are structured as pass-throughs, so S Corp, LLC filing as LLC and not a C Corp, well, they apply and they meet all eligibility requirements, but because they are not in a corporate structure where losses are accrued, instead they're passed through to the ownership structure, they get approved but don't have a benefit to sell. So things to think about there. Look over. That is all I see in the Q&A. Jasmine, did you notice if there was any in the chat maybe that I missed? Oh.
We did have someone raise their hand, and I asked her to put her question in the Q&A.
Okay. We did get one that popped up around verification of requirements, right? So there are especially employee requirements. So obviously you must meet all program requirements at application date, which is June 30th, but also when you close the benefit. Specifically, you still need to meet the minimum employment requirements here in New Jersey, and you can't exceed the total amount. So please keep that in mind. It's not just for the end of June, it's also going to be reviewed, and you must be meeting all requirements come whenever you sell the benefit, sometime in the time frame, usually from December to February. Well, I'm not seeing anything else pop up. Christopher, do you have any additional items or something that
Yes. Just to encourage people to look at the website, there's also a video presentation available there as well. And we will put these slides online shortly as well.
Great. Yeah, that would be my recommendation too. Please, there's tons of information on that website. Review it, and then if you have additional questions, reach out to us. We're happy to try to explain where we can. And if you can, submit a couple of days before June 30th. Once we pass the deadline date, we can only accept clarifying information. So if there's something that is missed, or namely around documents, after that June 30th, if it's just not clarifying something that we already received, we can't accept it. And that just was the final note that rings my bell here, that what comes up every so often. When it comes to clarifying information, a frequent thing, especially with companies that are having audited financial statements done, is their audit maybe is not complete by June 30th. We can accept draft financial statements, and then in July take the final audit, as long as there isn't a material difference. Did pop up, are audited statements required? No, just outside CPA prepared. So audited, reviewed, or compiled are all acceptable, but they have to meet the standard for the CPA and they have to be complete. So
one thing, Jasmine, I'm just notified that the chat is disabled.
it might have just shut down.
Yeah, it's disabled. So all participants must ask their questions using the Q&A feature.
Yeah, but audited financial statements are not required. They just must be full and complete. But any of the CPA forms reviewed, compiled, or audited are acceptable.
Okay.
Well, thank you very much, everyone, for joining today.
Thank you.